Next, I'd like to introduce Pat Soldano, and she will talk to us about a subject that we all care about in taxes. And let me tell you a bit about Pat as well. Pat has over 20 years' experience in the business, civic, and political communities. Since 1996, she has owned and managed Cymric Family Office Services, which is a multi-family office consisting of 7 families, as a registered investment advisor. In addition, Pat, very impressively, is the president of the Center for Study of Taxation, which is an organization that educates on the destructive effects of the death tax to families and their businesses, and is president and owner of Policy and Taxation Group, which advocates for the full repeal of the death tax through lobbying legislators and executive branch officials. Pat is proudly a founding partner of Women Impacting Public Policy, known as WHIP. Here she has worked collectively with 505,000 other women business owners to advance the economic issues important to women business owners. And Pat, we welcome you here and look forward to your comments.
Thanks, Tammy. As we all know, tax policies have a huge impact on small businesses and entrepreneurs. Research conducted by the SBA Office of Advocacy in September of 2005 shows that the tax cost of compliance for small businesses is 67% higher than that of larger businesses. Specific tax priorities for women-owned businesses include simplification of the federal tax code, permanency of small business tax provisions, an increase in the standard deduction, a decrease in the payroll tax, and relief from the alternative minimum tax and the estate tax. In March of 2006, Women Impacting Public Policy conducted a survey that indicated 88% of those surveyed were in favor of tax cuts for expensing for small businesses. 69% were in favor of tax cuts for capital gains and dividends. 71% were in favor of tax cuts for personal income tax brackets, and 68% were in favor of permanent repeal of the estate tax. The slides that you're going to see show the taxes I'm going to talk about today, as well as the tax rates of those taxes currently with the existing legislation. The legislation that affects income tax, capital gains tax, and corporate tax today is known as TEPRA, or the Tax Increase Prevention and Reconciliation Act of 2005. Now you know why it's called TEPRA. President Bush signed this into law in May of this year. This law extends the maximum tax rate on capital gains and dividends for 2 years through 2010, so that's a 15% rate that you all know about. It extends through 2007 the allowance for small business expense up to $100,000 in depreciable costs in a single year. And it provides relief from the alternative minimum tax, offering an exemption amount of $42,005 for single taxpayers and $62,005 for joint filers. The other tax that affects your business is the corporate tax, and you all may be affected by the recent Pension Act that was passed this year, signed in August of 2006 by the President. The Pension Act will tighten controls on companies that fall behind in funding requirements for defined benefit plans. It provides for a 7-year catch-up requirement. Plans at risk, so those plans that have less than 80% of funding or in danger of bankruptcy, would have restrictions imposed on them to increase the benefits and deferred compensation. The Act also promotes alternative retirement vehicles and cash balance plans, and it provides for more participant education. The estate gift and generation skipping tax, also somewhat known as the death tax, is currently being legislated by the Economic Growth and Tax Relief Act of 2001. This legislation requires that the tax on estates is 46% with a $2 million lifetime exemption. It will grow to $3.5 million, that's the lifetime exemption, in 2009, and the rate will go to 45%. Then in 2010, you have 1 year worth of repeal, so there is no tax, but in 2011, the tax goes back up to 55%, and you have a $1 million exemption. Legislation has passed the House. It's called the trifecta bill. I'm sure many of you are aware of it. That includes increases in minimum wage. That includes estate tax relief. Unfortunately, it has not passed the Senate, and there is speculation as to whether it will be voted on again in the Senate. It failed in August. This bill amends the code to reunify gift and estate and generation skipping tax, which just means they're going to be treated all the same, which currently they are not. And it will increase the exemption amount, the lifetime exemption amount I talked about, to $5 million in 2015. It will lower the tax rate to cap gains, or the 15% rate, but that's for estates under $25 million, and for estates over $25 million, it will be double that amount, or 30% in the year 2015. But this bill also provides an extension of the R&D credit, work opportunity tax credit, welfare to work credit, and charitable contributions deduction for corporate donations of computer technology equipment. If you want to know about existing legislation or past legislation, you should consult the website of thomas.loc.gov. You can input a bill number or a subject, and the bill will come up. It will give you the summary of the bill, the sponsors of the bill, the text, and just about anything you want to know on any existing or prior bill. On this slide now, on the screen I should say, is a slide that shows who to consult. And Tammy thought it might be helpful if I talked to you about who you need to go to for various things. Not a surprise, the person you're going to talk to the most is your tax accountant. And your tax accountant can help you with income tax, capital gains tax, corporate tax, just about any tax that exists. Your estate attorney will help you plan your estate. If you're going to do a will or trust or try and minimize the estate tax, you want to be seeing your estate attorney. A business attorney can help you also with the corporate tax and help you structure your entity in terms of tax minimization, whether it's a S Corp, a C Corp, an LLC, an LP, all those various different business structures. And of course, if you get involved in tax litigation, you need a tax attorney. Those are my comments, Tammy.